It's a state of equilibrium where all forces equal each other. All these digital assets, they live in an environment called blockchain.
COVID-19, the virus.
The consumer wants here and now. The Bitcoin will completely disrupt gold. Existing gold owners will die soon.
Welcome to EXANTE's Surfing the Curve series. Today, I'm joined by Gregory Klumov, CEO of STASIS and an expert in alternative asset management. Gregory aims to change stakeholders' mindsets to embrace cryptocurrency technologies. So today, we talked about the rising unemployment rates, as well as society's move to cashless as a result of COVID-19.
Good morning, Gregory. Thank you so much for joining me this morning for our Surfing the Curve series. I would like to, first of all, start by introducing you. So you are CEO of STASIS. Would you be able to explain to us what STASIS actually does?
Sure. Stasis comes from physics. It's a state of equilibrium where all forces equal each other. So I had that name in mind when I decided to create a stablecoin backed by a non-dollar asset, being the euro. My background is in finance. I worked as a macro hedge fund manager for more than 15 years. And crypto markets fascinated me several years ago. And back in 2015, I started thinking what could be the next big thing for crypto markets. And what's now called stablecoins naturally had my thoughts around it. So I launched the biggest non-dollar stablecoin now by the market cap.
That's fascinating. Could you explain to me, for people that don't really know what stablecoin is, what is it?
Basically, it's a meme. I don't necessarily agree with the term stablecoin, but in a simple words, it's cash on chain. So it's something that has a value of traditional cash. We all know, like euro, for example. But it has the same settlement characteristics like assets on the blockchain. So you can interact with it in the same way as with Bitcoin or Ethereum. You can transfer it without any request from a central counterparty. You can self-custody it, so store it in your personal wallet, and then you can trade it for other digital assets.
And is this then the future? I mean, obviously, cryptocurrencies, especially Bitcoin, have been in the news a lot this week with a lot of, I guess, analysts predicting that Bitcoin is going to reach $300,000 by the end of next year. But what would you say is happening in the crypto market? Should everyone be investing in crypto?
So very good question. Let me start from the technological part of view. So all these digital assets, they live in an environment called blockchain. And what blockchain does disrupt is clearing, custody, and settlement. And I was quite vocal about that during my previous articles and presentations. But literally what you have is a peer-to-peer solution to transfer value. And as the on-demand economy continues to grow, this will be and continues to be a very important tool to interact with this digital economy, on-demand economy. So there'll be Bitcoin, Ethereum, there are thousands of other digital assets, but all of them, whatever construct you have in mind, will need a settlement tool or some cash on chain to interact with the real world. So stablecoins, which is not the best term to describe this product, serve particularly this niche. They use as cash on chain as a gateway to these markets for institutional investors, for retail investors, an instrument to reduce volatility of investors' portfolios. And yes, the answer to your question is yes, I think everybody will be somehow invested in this digital asset marketplace in the years to come.
Excellent. And the other hot topic is COVID-19. And how would you say COVID-19 has maybe impacted the stablecoin, the cryptocurrency markets? I know that we're all using contactless at the moment as a form of payment because, in order to avoid spreading the virus. Has this accelerated our move to cashless?
Yes. So first of all, the first big part is adoption of the on-demand economy. So on-demand is something that a consumer wants here and now without delaying his consumption. It's transportation, for example, through Uber is a perfect example of on-demand economy piece, or lodging through Airbnb or some other instruments that provide on-demand hospitality. Payments are a necessary part of that, and yes, they are coming cashless, but still they require a lot of intermediaries to move these assets around, and sometimes there are bank holidays, weekends, and some payments fail to work. So what blockchain offers is a solution where everybody can settle value peer-to-peer without any central counterparty, and that's a very powerful narrative. Yes, it's young and it continues to scale, and it doesn't compare to the magnitude of the global payment systems like Visa and Mastercard offer today. But it's a very promising technology, similar to what internet was in 1994, 1996. Video streaming was not possible back then, although some companies tried, but it laid foundation for the future, for the products and services that were already built when internet finally scaled. So we are now exploring these products and features and experimenting with this technology, which is very early days, but definitely will have a significant part of our lives in the future.
But what does that mean then for Visa and Mastercard? What does it mean for the banks? Are they potentially going to be a thing of the past?
They'll face competition for the settlement services and products they currently offer. That has been a monopolized, oligopolized market for centuries, but suddenly there is a solution that can settle value peer-to-peer without any central intermediary. And like I said, this is very powerful product feature of this offering. But the second part, and I wanted to emphasize on that, the COVID thing, is the government spending packages, which were rolled out across the world and influenced dramatically the way people think of store of value. Because last year, global central banks printed more money than 200 years before combined. And this is really moving portfolio managers, individual investors around thinking like, what could they do to hedge from this excessive stimulus, excessive monetary printing, because holding cash, real cash, in real economies, they are getting diluted massively.
Sure.
So Bitcoin, for example, is a natural replacement, natural hedge for individual investors, institutional investors, from this phenomenon. And what is interesting about this year particularly is the first time in history institutional investors, corporates, started to allocate significant capital into this asset class.
Yes, well, obviously the news about PayPal investing in Bitcoin, that was huge, and that seems to have actually accelerated the price. Do you think more corporates are going to go this way? And if so, is it because it's such a, it's a no-brainer?
PayPal is just an intermediary that provides a trading tool or settlement tool for customers who don't want to custody crypto themselves. But what's more important is that big corporations, some that have even the public listings on stock exchanges, announce that they will allocate treasury resources to Bitcoin. And they do that because they don't receive any interest on their cash reserves. The interest rate in Eurozone is negative. In Great Britain, it's close to zero or slightly negative. In US, it's about zero, but I think we'll go into negative territory. And then corporates just think, okay, what do we do with this, with our treasury reserves? How we can diversify, how we can protect ourselves from the expected inflation that inevitably will come across the board.
Well, you mentioned JP Morgan yesterday when we spoke, and I think you said something like they were obviously very negative about Bitcoin many years ago, and now they're pretty positive, and you feel that it was almost like I guess they played the market.
Yeah, this is what investment banks always do. Before the global financial crisis, as you know, they had two different departments within the banks. That one was betting against the clients, another one was selling something to their clients. So it's a risk that huge investment banks inevitably face, that somehow they need to choose sides. And before they were deregulated, during the Clinton era, they were quite, cautious the way they conducted business. They were not allowed to have a proprietary position. They were not allowed to sell clients complex structured products. But then, after they were deregulated, suddenly they had all their tools in their hands to create products, to bet against them, to trade against their clients. And there were massive settlements. Every major bank paid massive fines last 10 years alone for misbehaving in this investment activity and just misconducting trading operations and investment operations, and just common sense. And but at the end of the day, they face a demand, right? So when customers call them every day and say, "Look, guys, I heard say Goldman is offering this structured product, or some European investment bank or brokerage firms are offering OTC services to trade these new instruments. Will you guys facilitate something for me, please? I'll pay some fee, etc., etc." So banks inevitably will face this demand, and they have to create supply. They have to create products that customers want. And customers these days, corporate customers, want treasury diversification. They want assets that are intangible, but that have finite supply and have forecasted inflation rate, and have opportunity to massively appreciate relative to other assets, which turned out to be infinite.
Of course. And I guess gold used to be one of those asset classes, and now it's actually being pitched against Bitcoin. It's kind of Bitcoin versus gold. Should you have maybe both in your portfolio, or would you say that actually the trajectory for Bitcoin is probably more positive going forward?
Yeah, so gold is very interesting. It has just one feature. It has just a very long track record of being a store of value. But I'm a big believer that Bitcoin will completely disrupt gold as a store of value. The reason I say this is because there is almost unlimited supply of gold on the ground. The global inventories that are already above ground are almost 200,000 tons. New generations, they will not need gold. They don't understand the value of it. They are much better with the technology. And once they inherit assets and capital from the elderly capital owners, they will not touch gold. They will not invest in gold. They'll buy something like Bitcoin and other digital assets because they are more friendly with it. Think of every child 10 years plus or minus. He is very friendly with games, gadgets. He knows that some assets inside these games can be valued very highly, right? So it's a natural one step for these guys in terms of digital assets and their value. So they will not treat gold as a significant store of value, and its value will just collapse, or at least stay underperform relative to the dollar. In a nutshell, existing gold owners will die soon. Like, it's a fact, right? They will not live for the next 100 years. They'll die next 5, 10, 20 years. Who will inherit that capital? The new generation, the millennials, the Z generation. those guys are more friendly with digital assets than anybody else. And elderly guys, they don't understand these assets. Look Warren Buffett, look George Soros. Some of them start to pick up interest. For example, Stanley Druckenmiller, Paul Tudor Jones, they finally announced they are looking in this asset class and have some exposure already, but they are kind of the top 0.001% of macro managers who really gave it a thought. The rest, old people who have this relic from this past, being the gold, they don't want to give it a second thought. They don't already have any, desire to reallocate something or to think of something innovative. It's really a hard thing to understand, as a matter of fact, the Bitcoin thing. You need to have not just the financial expertise, the way the banking system works, the way the global macro our assets are being priced, but also some technological expertise to understand how the actual network works, how internet works. And those old guys, they just don't have the capacity to figure that out. But once they die, their capital will be inherited by the next generation, who is very friendly with all those things. And guess what? They will allocate to they'll allocate to Bitcoin relative to Bitcoin every single day. They'll face that decision.
Of course. I mean, that was going to be one of my questions, but I guess at the moment, then Bitcoin is more of an institutional investment, for high net worth individuals who maybe have a better understanding of the actual product. I mean, if anybody can say that they're a total expert in Bitcoin, apart from obviously yourself.
Well, the expertise and the learning curves are picking up massively. So there are several centers of expertise across both sides of the pond. I mean, the US and Europe. There are dedicated hedge funds who trade digital assets. There are multiple startups who do the decentralized finance products. So, and the regulators have been involved in a number of regulatory discussions over the course of the last few years. And one of the activities of before I created STASIS was to help European countries better understand this technology and create a legal framework around these assets. So the learning curve is steep, but they're moving really fast way up. So I think next few years, there'll be no significant institutional investor who haven't thought or haven't heard of digital assets.
Sure. I agree with you. I mean, I think that it's definitely more in the mainstream now than ever. And, I know friends who are talking about it. So, and I think, like you say, the future generations will be even more technologically advanced, and it will probably be something that becomes a natural way of living, everyday life in the future. Well, okay. So what about, we mentioned COVID briefly and how that's had an impact maybe on the volatility of the markets. Another big area that, COVID has impacted on is unemployment. Unemployment seems to be consistent across all of the nations, the UK, the US, across Europe. Is this something that is, do you think, here to stay for, at least for the next few years? Because until we have a vaccine that's proven to work, and until everybody is vaccinated, because obviously that's the next challenge, because there are people who don't believe in vaccination. Do you believe that some industries will suffer, and therefore we are going to see more job losses?
Well, I just look at it as a macro analyst. The unemployment is a structural supply problem. There's just too much of human supply across the world. We almost total 8 billion people now on the planet, and 1 billion of those of that supply basically came to the market last decade or so. So there is just so many people competing for the same or even smaller amount of jobs, because economy has not been growing generally for the last decade or so at an above inflation rate. And second, the technology is deflationary, because now you've got solutions like Zoom, like Skype and Gmail, and all these tools that help cut the middleman and optimize the costs and optimize business processes. And there's just not many demand for new positions. Not even all the positions are being cut, right? Just because the technology disintermediates that. So it's a first of all, it's a supply problem, and second, it's a technology that disrupts multiple positions and human resources that were utilized previously. Outcome is demand for education, and you can see the tuition costs for major universities are through the roof. I'm looking at Stanford, for example, some executive programs, they are up 5 times last 10 years in price. So that basically shows you how much of a demand there is to pick up the next expertise, the next learning, the next big thing for the humans to professionally reorientate themselves.
Sure. Thank you so much for sharing your expertise, Greg. Really appreciate your time this morning. I know you're a busy guy. What's next? What's in the pipeline for STASIS? Can you give us any insight into what you guys are doing at the moment?
Sure, we are looking at to add other blockchains as settlement layers. So we are currently working on Ethereum as the major settlement solution for major stablecoins, not just us. But we are looking to add other blockchains to that product fit, and also to experiment with the acquiring solution we built, because now we have a service to offer Euro as a service via APIs to anybody who has internet connection, and that's quite a powerful product.
Brilliant. Well, that sounds very exciting, and I look forward to hopefully speaking to you again in the future and finding out a bit more. But as I said, thank you so much for your time this morning. It's been really wonderful and interesting talking to you, and I hope to speak to you again soon. Have a wonderful day.
Thanks for having me. Have a great day.
Thank you very much. Take care. Bye.
Thank you for joining us. As Gregory says, the unemployment rates are probably here to stay for the foreseeable future. However, COVID-19 has had a positive impact on Bitcoin and cryptocurrencies in general. It seems that the only way is up for Bitcoin. Until next time, see you later.